Hi, Zandy Filipiuk in Toronto for the week of August the 29th. On Friday, Jay Powell gave his speech at the Jackson Hole Convention of Central Bankers, and the market basically didn't like what he said. Powell, in effect, indicated that interest rate hikes will go on for longer and rates will go higher than the market was expecting. So as a result, on Friday, the Dow sold off 1,000 points, and through this week, it's continued to be downward. Now, the Fed, you cannot blame them because one of their mandates is to fight inflation. So they really, in order to maintain any sort of credibility, have to fight inflation tooth and nail. And in effect, this is why I keep talking about it, because they really are the only game in town now for determining the price of assets globally. Now, one of the things that I've included here is a chart of the M2, or the money stock within the U.S. banking system. And if you look at the chart, you can see the massive run-up in credit the last couple of years because of the COVID lockdown. The federal government was forced to spend trillions to support the economy while things were shut down, and as a result, so much money was put into the system because the Federal Reserve, in effect, printed the money. They bought the government bonds with printed money, the government spent it, the money supply ratcheted up. As you can see now, money supply growth has collapsed. It's showing negative 6%. And for the last 15, 20 years, the U.S. banking system, and the global banking system for that matter, has in effect become a perpetual motion machine, meaning more and more credit growth is critical for the economy to grow. So as the Fed raises rates, and as we're going to see, begins to run off their balance sheet even more over the next year, they're going to try to take out $1 trillion of money. Can they allow the credit growth to continue downward? Because if it does, it's going to create even more problems for the economy. So as we stand, the Fed is in between a rock and a hard place. They're raising interest rates in a recession, and what they do and for how long they do it will tell the tale. But it's not, I don't think, going to get any easier for the next couple of months, as the inflation boogeyman is still priority number one for the Federal Reserve. Thanks for watching.